Hey, how's it going, everyone? Excuse me. I'll be right with you. A couple minutes. Just let me get a few more things squared away, and let me know if the audio is coming in okay. And I'll see you guys in a bit. Cody R, J A, Mutant, Yodi, Peter Schultz, Pudenda Johnson, Bill Wood, 495. Thank you guys for being here. Be with you shortly. Hope everyone had a great Thanksgiving. Hello again, everyone. Welcome to another, excuse me, edition of Silver Bullion Television, SBTV. I'm your host, Patrick Vieira, and this is our live stream. So hope the audio and everything is coming in okay for you folks. Bill Wood, how you doing? Ukbay Nguyen, how you doing? Jack Parsons, Harold B, J.A. again, Randy Osborne, how you doing? The Mick, 26, how you doing? Yep, it's time to saddle up and silver up for sure. Hey, if you're new, go ahead and type in new and where you're from, and we'll see if we can acknowledge you for being here. But again, I do thank you all for being here. And again, if it is your first time here, please do by all means go ahead and subscribe. Uh, Hang on, go ahead and subscribe. Hit the bell to be notified for new updates, and give us a thumbs up if you uh, basically if you like what we do, or if this is helping you out in any way. Give us a thumbs up. They really do help us out quite a bit, and we do appreciate it. As always, you can find us on social media. Silverbullion.com.sg is our website. We do sell silver, gold, precious metals here in Singapore, but probably more importantly, we do specialize in systemic wealth protection. So again, a lot of people know what's going on right now, all the money printing, things like that going on. Um, we do see a lot of people do see a space in where fiat currencies will certainly start to get into some trouble. And so, if you understand these things and you're looking for a systemic wealth protection, do contact us. This is something that we do specialize in. Silver Bullion SG is our Facebook handle. Silver Bullion PL is where you can find us on Twitter. Audio versions, bit.ly, SBTV iTunes, or SBTV Spotify for just the audio versions. And again, do hope you join our Crisis Tracker group. This is where we go through the news. We pick out a couple things pretty much daily, and we go ahead and post it. So we kind of sort of sift through all the riffraff for you, and take it from there as we go forward. Um, okay, moving on. Let's see. Hidden Numis, straight away. Appreciate that. Appreciate it very much. Appreciate that you're here. And again, appreciate your comments. You do give a lot of great comments. Everyone gives a lot of great comments. And again, these comments, they do more than anything I could ever do or say, because there are a lot of people who are trying to understand why silver, why gold. And your comments are things that help them out or definitely point them in the right direction. So we do appreciate that. So let's see who else is here. Again, Hidden Numis Mattis. Thank you. Appreciate it. Let's see. J.A. Okay, Randy Osborne. Yeah, that's the whole thing. Chapter 7, chapter 11, whichever it is. you're not really seeing that right now. These restructurings going on because basically what we're going to talk about later on, zombie companies where they're being held up. They are being held up. They're being kept afloat, and we're going to take a look really not so much, let's say, into the numbers. I mean, we'll skirt on the numbers, but we're going to try and find out, is this a good thing or a bad thing, to have the Fed hold up these zombie companies, or businesses, government hold up these zombie companies. So we're going to get into that shortly. But coming up later on this week, we are going to have Doug Casey, founder of Casey Research. He's also a best-selling author, world-renowned speculator, and libertarian philosopher. So Doug Casey has garnered a well-earned reputation in his erudite and often controversial insights into politics, economics, and investment markets. So we're going to be having a visit with Doug Casey. So that one should be pretty good. A little bit more on the roll call here. See who's here. Third world trillionaire. I'm new here. Welcome aboard. Where are you from? Let us know where you're from. But glad you could be here. Frank Cerveni, how you doing? Ja, yes, it'll be Doug Casey. So we haven't. I think last time we spoke to him was last year. So it should be pretty interesting to see what he says about this year, considering all the changes that have come about, and we all know them very, very well. So having said that, we'll move into our ebook thank you giveaway. We're going to be looking at something David Morgan had said last week, and what we're going to be doing is, again, we're going to be giving away his silver manifesto. There's just so much info in there. I think a lot of silver bugs, even gold bugs, will appreciate it. So it's a detailed examination of an incredibly underappreciated asset class, precious metals, notably silver. And the book takes an in-depth look at all aspects of the silver market, including but not confined to the monetary history of silver. So we're going to be giving away this book as a thank you. Thank you all for being here. So the rules to the game, you guys know this all already. Download that Kindle app. It's a free app. Download it for your phone or from your phone or tablet's app store. It's free, once again. Be the first to answer the question correctly in this live stream. You're going to have about a minute and 30, so answer it before the timer runs out. U.S. winners are going to be given a link to download the ebook, and winners outside the U.S. are going to be offered a alternative prize at our discretion. Again, that's because for some reason Amazon doesn't allow these gifts to be given outside the U.S. And you're going to have to provide us an email during the live stream. So those are the rules. Let me just check one message real quick here. Make sure everything's okay. My colleague Vincent's on the other half or the other side, so he'll usually let me know if things are okay technically or otherwise. So again, these are the rules, and don't worry about providing us the email, because what will happen is Vincent, my colleague, the better half of this program, he will go ahead and mute your comment. So what will happen is only he will see your email, and then no one else will see it. So that way we can go ahead and contact you afterwards. Okay, so having said all of this, we're going to go ahead with the question. Okay, and the question is, make sure everything is running okay here. Okay, the question to win that David Morgan ebook Silver Manifesto is from his interview last week. If a nation state wanted to get monetary control, what should they do? Okay, so think this one through. From David Morgan's interview last week, he said if a nation state wanted to get monetary control, what should they do? Okay, so we got a little bit over a minute left, so we'll be looking for some answers here. And I know what the answer is. Vincent knows what the answer is, but do you know what the answer is? So hopefully we'll get some answers coming in, and we'll see who gets it right. Okay, so if a nation state wanted to get monetary control, what should they do? Okay, answers coming in. Okay, Truth Monster, fiat back the fiat with silver. Trav Sounder, link to gold. Harold B, print fiat. Uh, Mr. Nguyen, allow new enterprise to fill in. Penny Pinch and Prepper, favorite life. Okay, not the right answer, but we'll take it. We'll take it. Silver Warrior, gold standard. Peter Schultz, issue silver as money. Okay, QE, monetize silver. Okay, a lot of answers coming in. Hang on here. Okay, and so that's it. We'll stop there. Let me see. I'll go all the way up to let me see, make its currency. Okay, we're gonna go up to Patrick Bateman. So we got three guys who answered the question correct. The correct answer was to get silver. So the winner is Truth Monster. He was the first to answer it correctly, and then we had Peter Schultz and Patrick Bateman. So you three guys, Vincent's going to go ahead and mute your comments, and then he'll ask you for your emails. So again, that's Truth Monster, Peter Schultz, and Patrick Bateman, the three that got it right. So for Peter Schultz and Patrick Bateman, you win the alternate prize, which is going to be Build Your Own Bank by Aon Schmidt. And again, it's a terrific book. Gives you a lot of pointers in there on what you can do. And so just to verify that the correct answer is get silver, we'll go ahead and roll that David Morgan clip.
I had a fund manager that managed a fairly significant amount call me from Hong Kong, in Asia at least. I think it was Hong Kong. And we had quite a lengthy discussion. He was quite a student of the silver market, and he was pretty excited because he basically said, if a nation state wanted to basically get a handle on, I'll call it monetary control, my words, not his, that silver would be the way to do it.
Okay, silver would be the way to do it. Get silver. So that was the answer. All confirmed. Again, Truth Monster. Congratulations. Peter Schultz, Patrick Bateman. You'll be getting the alternate prize. And I saw one name in there. I'm going to have to acknowledge this. Seymour Rivers. I know, but I'll pass. I read the book. I know you know. You're always getting these answers correct. So I just thought I'd throw that one up there. Seymour Rivers, he's I think you're in the lead, or one of the guys in the lead so far. So again, appreciate everybody's participation here, and basically get silver. Even if you don't want to control a government or the world monetarily, at least be able to help out and control the situation for your family and friends. Same advice. Get silver. Get silver. So again, moving on, let's go ahead and take a look at the silver and gold price over on our website, silverbullion.com.sg. Gold and silver really got pummeled last week. A lot of speculation is because it was news of the upcoming vaccination or vaccine, or a lot of different reasons as to what guys gave, but nonetheless, it did take a little bit of a beat down last week. But for those still stacking, trying to get a position, it helps quite a bit. That move helped quite a bit. So silver currently at 22.44, still on the way down slightly. Gold back under 1800, 1782 for gold, and we see nickel clearing that $16,000 per ton level. If you guys are following what's being said in the markets right now, the renewable energy sectors have just been taking off. And part of that is, of course, when you look at EV stocks, electric vehicle manufacturers, though their stocks have been going up. And of course, that means these guys are going to need more nickel, because nickel plays a key role in the battery for electric vehicles. So keep an eye on nickel. As we've been saying, it's cleared 16,000 now. Okay, moving on. P2P. This is if you have gold and silver, precious metal stored with us, you can actually use it as collateral to take out a secured low interest loan, which is good. You keep your assets working for you. And if you have a bit of extra cash laying around, you can You can help people by creating a lending offer where you can their silver and gold is the collateral, and you can go ahead and lend them money through our peer-to-peer platform. You may be even getting more interest than what's out there or currently being offered out there. So, it is a good deal, especially for you guys over in Europe. I know it's headed or in a lot of places negative rates right now. So, this is something that you may want to look at to getting some type of a return. Go ahead and either way sign up for the storage account. It is free. There's no maintenance fee, and this is how you get started. You never know when you're going to need it. You may need it right away. You may want to use it right away, or maybe just keep it in your back pocket for when that time comes. Investor kit, a lot of information here as to why you should be looking at silver and gold. The ratio, just under 80, so it's come back up with the price action for gold and silver right now. Uh, Definitely still a good time to be buying silver. Anytime it's at about that 80 range or definitely above, you should really be looking at silver. If you're trying to make the decision whether to buy silver or gold, this is one of the things that may help you. So moving on, let's take a look at a few news articles from Twitter. European Central Bank. There's a 5-part thread here. So let me go ahead and open up all 5 parts. Technological innovation opens up opportunities and risks, says Executive Board member Fabio Panetta at the Bundesbank conference. Future of payments in Europe. Our strategy is to empower Europeans with efficient, inclusive, and secure payments in the digital age. Panetta goes on to say big tech and stablecoins could disrupt. Big tech and stablecoins could disrupt the European financial system. While they could offer convenient and efficient payment solutions, they risk endangering competition, privacy, financial stability, and even monetary sovereignty. Second part of his thread, moving on. We are implementing a comprehensive policy to ensure that citizens' payments, their needs are met, while safeguarding the integrity of the payment system and financial stability. We are also promoting safe pan-European instant payments. So this is going to spread. Keep an eye on it. What is at stake is nothing short of the future of money. Okay, let's see that again. What is at stake is nothing short of the future of money. So they're making the decisions for us, right? Sovereign money also needs to be reinvented. Sovereign money also needs to be reinvented. This requires central bank money to remain available in all circumstances as cash and potentially as a digital euro. Okay, so here we go. We've been talking about these central bank digital currencies. More and more it's coming out. It's not a secret anymore. It is real. This thing is going to happen. He goes on to say a digital euro would combine the efficiency of a digital payment instrument with the safety of central bank money, offering together with cash greater choice and access to simple ways of paying. Have your say in our public consultation. So apparently he is saying to some degree there may still be cash, but a lot of people are really suspecting that eventually you're going to phase out cash and coin. From Forbes, airlines are struggling. Here's why you should care. Basically, what this article says is the airline industry also affects tens of millions of other jobs, and you can't imagine things like catering, taxis, things like that. So it affects more than just the airline itself. So you should, according to Forbes, you should really care why airlines are struggling, understand it, and basically why they should be kept alive, even if some of them may be looking at a zombie life, I guess you could say. But anyway, this is what this article talks about. Gold Telegraph: the euro was the most used currency for global payments last month. The first time it has outpaced the dollar since February of 2013. The trend is very clear. The U.S. is losing the dollar dominance before our very eyes. Welcome to the era of gold. So if you follow us here, you know for some time we've been talking about things like Instex, which is the European rival to the U.S. SWIFT system, and a lot of these countries they are looking to get off having to use the U.S. dollar. And next to the dollar, the biggest share is the euro. The euro has the next biggest share of currencies being used. So you can see right here, the euro was the most used currency for global payments last month. I mean, a lot of this may also be because of the lockdowns and people had to use their home currencies more often. So again, with the population of Europe, they're going to use the euro more than the dollar. Excuse me, for ordering things online. So there's excuse me, a lot of reasons why this is, but the point being, the world is moving away from the U.S. dollar. That is the point, and it's something, especially people in the U.S. have to understand. Nomi Prince. Over one third of Americans say they live in households where it is difficult to afford household expenses, including food, rent, or mortgage, and student loans. The highest share in 6 weeks. Take a quick look at this article here. There's a list of things on it. Um, let's see. Relief programs include special unemployment benefits and penalty-free pauses in mortgage and student loan payments. This is why it matters. Those most at risk are depending on one or more of the relief programs, following relief programs that are set to expire. So this is what this is referring to, where the penalty-free pauses in mortgage and student loan payments. Economic support measures were created earlier this year as lawmakers thought the pandemic would be under control by now. Deadlines are approaching. The virus is worse than it's ever been, and Congress looks unlikely to re up support measures. I'll just go down to what they're saying. Sorry, folks. Maybe it's really a tough time for these folks, and they are caught in the middle of stupid Washington politics, says the senior fellow at the Urban Brookings Tax Policy Center. Maybe people lost their job in April and got it back in July, and now they're losing it again. And they don't know if they can feed their kids and pay rent. There's a hope a vaccine will come and perhaps alleviate economic pressure, but until then, this is a really important time to give people that bridge. And again, a lot of analysts say even if a vaccine came about, you're still looking at half a year or more before things can even get back to somewhat of a normality. Over one third of Americans say they live in households where it's difficult to afford household expenses, including food, mortgage, student loans. Hang on, let me move on. The impact is a roughly 39 billion income shortfall, assuming the unemployed workers can't find another job to alternate income support. Possible outcome if potential state lockdowns further weaken the labor market. Result is as much as a 1.2 percentage point drag on next quarter's economic growth. For renters, the CDC had a prevention order that halted rental evictions. That's going to expire next month. Student loans, about 22 million borrowers took advantage of the payment pause, according to estimates by Student Loan Hero Base government payment status report. Nearly 3 million borrowers with government-owned federal loans were already in forbearance before the pandemic. So there's quite a number of things that are coming up or that we're passing through that are going to affect the economy in ways that I think basically politicians were hoping were going to be solved or smoothed over. They're going to come up again. In Gold We Trust, Ronnie Strofle and Mark Valek published an article in which they outline why gold will be one of the big beneficiaries of our current economic situation. Let's take a quick look at this as well. And then we'll take a look at one more article. Okay, so let's see. Like with the drug addict, the year 2020 has been all about stimulation. And we, of course, mean the economical, but the two have their similarities. Like a drug, by now, the regular dose just doesn't cut it anymore. More is needed, and the search for a new way to stimulate is in full swing. So far, very original ideas like deeply negative rates or MMT seem like the way to go. And the tension between deflation and inflation is growing larger by the day. It seems that we might see a comeback of inflation due to the current lockdown and policies, bug policies around the world. These policies center not only on lockdowns, but as we all know, also feature massive injections of liquidity to keep the fine mess of a ship afloat. We need inflation, and they will do everything they can to achieve it. And we know that gold is going to do or does significantly well. Silver does significantly well in inflation as the currency is debased, starts to lose its value, and people are really looking for that store of value to keep their wealth or store their wealth. And these are things that gold and silver do. We'll take a look at this last one here from a tweet from George Gammon. Milton Friedman's permanent income hypothesis, or I guess we could say UBI, suggests that one's spending decisions are guided by their estimated long term average or permanent income and not their current after tax income. According to this theory, policies resulting in higher short term income, such as temporary tax cuts, may not cause an increase in spending as individuals prefer smooth consumption. Consumers do not change their average spending until they reform their income expectations. This theory was proposed in 57 when the Keynesian consumption theory was unable to explain constant savings rates despite rising real incomes. So this was from George Gammon, where he says UBI could be an inflation catalyst according to Milton Friedman. And I would say another catalyst will be once these infrastructure type government jobs really start to move and open up, and people feel more stable with their income. Just as Friedman had said, you got to feel stable. You got to feel confident in what your pay is going to be, how long it's going to be, and then you can reshape, reform your spending habits. So I think once things like infrastructure jobs come in, guys feel safe, they'll start spending. That's just my opinion, but it is on the table for sure. We are going to be looking at things like infrastructure jobs coming in. So let me take a look at some of the comments here and see what's going on. So yes, winners, if you haven't already done so, please share your email in chat. And again, my colleague Vincent is here. He will mute your comment so that way nobody will see it. So be sure you send your email in chat. Okay, thanks for helping out with that, Vincent. Okay, so you got it. Okay, that's good. Um, let's see. Let's see. What else is out here? Yeah, a lot of opinions on this vaccine. Some guys are okay. Some guys they don't feel okay with it. I'm just reading through your comments here. Um, let's see. Patrick Bateman, George is awesome. George is awesome. I mean, if you've never been to his YouTube channel, he gives some pretty good stuff. He puts out some pretty good stuff. George Gammon, appreciate the work that he does out there for sure. Let's see what else is out there. Let's see, Mr. Nguyen. When the U.S. went off the gold standard, capitalism fell, and I'll add to it. We started seeing crony capitalism. All earnings were on fiat currency, easily manipulated. And that's the thing. I mean, we're seeing what the Federal Reserve is doing right now, all this money printing. And the thing is, though, they cannot create the money. They can't create the money or the currency unless the government gives them the okay. So politicians have a huge role in all of this. They have a very, very huge role. That's for sure. Let's see. Well, that's a good question. Bay Creek History Detectives, is there UBI in Singapore? I'm going to say no. I'm going to say no. My colleague Vincent might want to chime in on that as well, uh, and he has. No, there's no UBI in Singapore. I mean, I can tell you one thing about Asia. When I first started living in Asia, I found it very refreshing and scary. I'll just use the word scary at the same time, where you may not have things like social security in depending on where you live in Asia. You may not have those types of things. You may not have things like workers' compensation. Don't have those things. You may not have things like welfare. And so coming from the US when I first got to Asia, and it depends where you go to in Asia, and you live a life without these things, you know, it it kind of makes you think and look back where, wow, we have all these programs in the US and in other places you don't have these programs where people really, you stand on your own 2 feet and you make it on your own 2 feet. Not as much of a safety net. So that was one thing. I guess since we're on that topic of UBI, that was one thing I noticed when it came over to Asia. Every place is different in the world. That's for sure. So moving on, want to take a look back at David Morgan last week, and there were a few things that he said that I want to start up for discussion. So I have 3 clips that I'll play. Here's the first one.
There's a fiat currency destruction that's taking place globally. Precious metals always protect you. Gold is basically the standard. It will preserve your wealth. It always has. It probably will this time. Silver, on the other hand, has been demonetized for over a century, yet it still acts as a monetary metal in times of crisis.
Okay, so David said gold should be able to perform well in a time of crisis. In a time of crisis, history tells us that. Absolutely true. What was interesting is that David said, although silver has been demonetized for over a century, it still acts like a monetary metal in times of crisis, which means as well that silver will do well in a time of crisis, just as gold will. And again, this is the reason why a lot of us, we absolutely understand gold and silver, what they do, and why we move into it. So here's another clip from David Morgan. Let us know what you think in the comment section as well. And again, if you're new, type in new and where you're from. So one more clip from David Morgan.
They can print all they want from this point forward. It's really not going to do any good. Now, I want to be careful here because there's people getting checks from the government. Without them, they'd really be in dire straits. I understand that. But what I'm trying to convey is the system is so broken that money from the government may be certainly of very important value to you, but it's not going to help you in the long run. The system's too far gone.
Okay, so the Silver Guru says how printing will not do any good. And again, this is looking long term. I mean, down the road. For right now, it is kind of sort of plugging up the holes, reinflating things, keeping people afloat, businesses afloat, giving people relief. So short term, it it is what it is. It has to do what it has to do. But long term, that money printing, we've talked about this before. I think Jerome Powell is going to be there, standing next to that printing machine, cranking it as quick as he can, and the bearings are just going to start smoking. That printing machine is just going to fall off its legs, topple over, and Mr. Powell is going to be standing there with the handle, surrounded by some smoke from that machine, just giving up. It just can't keep going, can't go on forever. And so David says, the system is too far gone. And again, this is one reason why we have to move away from fiat and even outside of the financial system. So again, if we understand this, then we can clearly see what David Morgan is talking about. So one last clip from David Morgan, and again, please feel free to put comments, and maybe we'll start up a discussion on it.
Another myth that we have in the silver market, and this one you hear.
Oh, sorry, guys. Let me just say, this is something David did a while back, and it pertains to how much silver should you own? How much silver should you have? It's about 3 minutes, so just stick with it. It's a pretty good clip. Again, so this is not from our interview, but this is from another prior post that David had done. So I'll go forward with it.
Primarily from coin dealers, bullion dealers, especially those that are, maybe been chided in the last bull market when silver ran so quickly. Basically, in 1 year's time, from $6 to $50, a big move in a short amount of time. You'll hear, well, I think everyone should own a little. And what they're implying is that, everyone should have a little gold and silver. And they're really not that in tune with the global system or what's really going on. They may have been actually more so in the previous bull market. Regardless, it's one of mine that I love to dwell on. Everyone should have a little. Two very ambiguous terms. What is everyone and how much is a little? So in the context of everyone, we could think of every human being on the planet, and that would be over 6 billion people. But I'm going to narrow it down. We're going to use about 5% of the world's population, and we'll just say everyone in the United States. And that's round numbers, 350 million people. And now we need to define a little. How much is a little? Well, I'm not going to use 1 ounce as a little because 1 ounce at the time we're doing this is about $30. And I don't think anyone would say $30 would significantly change their life. Maybe $30 in lottery tickets and hit the lottery, certainly that could change your life. But $30 in any investment that I could think of, probably, even the most far outdated option that comes true, probably wouldn't significantly change your life. So I'm going to go to 2 ounces, which certainly $60 wouldn't change your life. So I think I'm well within the realm of a little. The reason I chose those two numbers is simply this. There's roughly 700 million ounces of silver mined every year. A little bit more, a little bit less, depending on which study you use and what numbers you gather. But round numbers, you can up it to 800 million. But quick math, 350 million people times 2 ounces, 700 million ounces. So that roughly covers the entire global silver supply on an annual basis. And yet, this is a small number relative to silver's total position. So there you have it. If everyone in the United States bought a little silver, you would be buying the annual mining supply of silver without even thinking about it. However, if you applied it to everyone worldwide buying a little bit of silver, I think you can see my point. The point is very simple. There are a lot more people than there is silver available for investment, and I've maintained that all the way up. What's funny is that the amount of silver that is above ground that is held already is in tight hands. So the float, or the amount of silver that's actually up for auction on a daily basis, is not that great. Much smaller than the 700 or so million ounces is mined. Most of that's already accounted for in the future, not so much in the futures market, although you can make that case. The point I'm making is that most of the silver users already have hard contracts in place for silver out in the future that they absolutely need to have supply to them to continue their businesses, be it auto, be it solar, be it chemical. A lot of that silver has already been bought ahead of time. As it comes out of the smelter, it's already got a destination. Back to the saying, everyone should own a little. Not everyone can, and not everyone will. There's a lot less silver out there for investment than most people think.
Okay, David Morgan. This is something he produced a while back. So how much silver should a person own? How would you even define how much you should own? I mean, some people think you need enough to get through the transition from this monetary system to the next. Some people think, and rightfully so, that there are going to be opportunities that are going to come about when all of these things start to take place and fiat currencies start to head south. Things like gold, silver, they're going to store the value of your wealth, and you're going to be able to do things with them because in terms of relative terms of dollars, US dollars, or any other fiat currency, it's not going to be able to hold the value, or probably more important, people will not want to go into these fiat currencies, and they're going to be looking for some type of other thing that they could use perhaps as money, or probably more importantly, something that will store their money or store their wealth. And again, these are things that fall right into the lap of what silver and gold do. So that question, I mean, how much silver should a person own? You know, it's a tough one to answer, but you should own some. And as David said, not everyone will be able to have some. So with that, you know, I do hope you had a chance to watch David Morgan interview, and we're going to be moving on to zombie companies. You know, businesses, they are getting hit hard with the shutdowns and with the slowdowns and with the lockdowns all down. And we hear the term zombie company. Zombie company. I think maybe we never really heard that term till a year and a half, couple of years ago. And some have already fallen into being a zombie company, and many more will. So I wanted to take a look at what a zombie company is and what's going on with zombie companies and what should we do or what should we not do when it comes to zombie companies. So first up, definition of a zombie company from Investopedia. Okay, so we'll just take a quick look. That's the definition. Let me make this a little bit bigger so we can all see it. Oop, too big. Okay, zombie companies. Zombie companies or zombies are companies that earn just enough money to continue operating and service debt, but are unable to pay off their debt. Such companies, given that they just scrape by meeting overheads, wages, rent, interest payments, and debt, for example, have no excess capital to invest to spur growth. Zombie companies are typically subject to higher borrowing costs and may be one one event away or a poor quarter performance away from insolvency or a bailout. Zombies are especially dependent on banks for financing, which is fundamentally their life support. Zombie companies are also known as the living dead or zombie stocks. This part was pretty interesting though, where it says zombie companies are typically subject to higher borrowing costs, and I don't think we saw that because the Fed basically just had money dispersed all over the place. They even bought up corporate bonds. So, I think this time around companies kind of they got the money at a much lower rate. Companies that were in trouble anyway, than they typically otherwise would. So some key takeaways: zombies are companies that earn just enough money to continue operating and service their debt. Zombie companies have no excess capital to spur growth and are considered close to insolvency. In rare cases, zombie companies might stretch itself financially, produce a lucrative product, and reduce its liabilities. And zombies are high risk investments and not for the faint hearted. A little bit of history. I believe this all came about from, there you go, Japan. Zombies were first spoken of in reference to companies in Japan during the country's lost decade of the 1990s following the bursting of its asset price bubble. So that's the definition of a zombie company. I will take a little bit closer look. This is coming from Yahoo Finance. Now, should these corporate zombies give you nightmares? So here's some numbers on it. An analysis from Lisa Lee and Tom Contigliano of Bloomberg News found that 527 of the companies in the Russell 3000 index of large U.S. corporations with a combined 1.36 trillion of debt are zombies. That's quite a bit, meaning they had trailing 12-month operating income that fell short of the interest expenses they owed over the same period. Now that's up from 335 firms with 378 billion of debt at the end of last year. It's a staggering increase for a list that includes companies ranging from Boeing, huge company, to Uber, and even vaccine wonderkin Moderna. And it raises serious questions about what America's post-pandemic recovery might look like. After all, companies that don't even make enough to cover their obligations are not in much of a position to hire more workers or invest in opportunities to grow their businesses. And we kind of saw this in the tweets where, unfortunately, employees or workers are going through a revolving door. They lose their jobs, they find another, and then they end up losing that job again. So in starting to unpack this list, it becomes clear that share prices are only so useful as a guide. Now, Uber reached an all-time high this week, and AMC Entertainment Holdings nearly set a record low. Credit ratings also cannot tell the whole story, where you have Boeing and General Electric have had issues with their balance sheets for years. I think a lot of us are familiar, or we keep hearing about them in the news, or we have heard about them in the news for a very long time. And they were given plenty of time to sort it out and still hold investment grades. whereas Carnival Corp's senior unsecured debt rating was cut 5 separate times by Moody's Investors Service since the start of the pandemic. Even published research on corporate zombies is mixed. On one end, there's the Bank for International Settlements, the BIS, which found that once a company becomes a zombie, its performance remains significantly poorer than that of non-zombie firms, and it faces a significantly higher probability of exiting the market through bankruptcy or takeover. So, as one of you mentioned before, where's that chapter 7, chapter 11? You don't see it. Yet, the Peterson Institute for International Economics suggests that in an economy like the current one, zombies are worth fighting for. It costs creditors little to keep loss-making firms in operation in hopes of renewed profitability when the economy recovers. There's nothing wrong. There's nothing wrong with this outcome. Okay, and so this is what we're going to take a look at. Zombie companies, is this something we should be, or the Federal Reserve or the government should be into? Do you keep it afloat? I mean, we have the human element there where people's jobs are on the line. And then you also have the natural market forces. Let the market do what it needs to do. If it means, some type of only the strong survive, then that's what the market dictates. That's what the market says. So let me go through a few comments, and then I'll continue on here. Okay. Let me just see what we got here. Okay. Well, a bit off topic, but worth mentioning. JP Morgan is controlling the low paper price of silver. It is meaningless at this point. Just hold it. A lot of speculation, and I think, maybe speculation is not the right word, because there have been case after case. There have been fine after fine. So, it's not some, as some guys like to say, conspiracy thing that these companies are trying to push down the price of silver or gold. It's true. You wouldn't have these fines if it were just an idea, just a thought. It actually happens. So that's a great comment there. Okay, so moving on. What I want to take a look at is zombies and central banks. This is just a brief touch up as well. Okay, excuse me. The zombification of the economy is of great concern because it can lead to a drop in productivity through credit misallocation. The credit misallocation channel can operate both directly and indirectly. The direct channel arises mechanically because keeping zombies alive reduces aggregate productivity, or through a crowding out effect when zombie lending tightens the credit constraints of high productivity firms. The indirect channel arises from congestion effects, whereby subsidies to weak firms may distort competition in both product and input markets and lead to a reduction in long-term investments of zombie firms. Financial support from governments and central banks can affect the scope for zombie lending. While government support schemes will provide relief to cash-strapped firms and allow illiquid but viable firms to survive, they can impede creative destruction and generate moral hazard when there is no effect or efficient sorting mechanism in place to ensure that only firms that need it receive support. Similarly, the provision of central bank liquidity and low interest rates can support illiquid but viable firms. However, they may also mask zombies because indebted firms become more viable at lower interest rates, and such policies may prevent an orderly restructuring of firms when kept in place for a prolonged period of time. And it's kind of what we touched on, where typically they should be getting charged higher interest rates, but it's different this time around. And the literature has not found a clear link between the level of interest rates and the incidence of zombification. Within Europe, the large variation of zombie shares across countries would also suggest that a single monetary policy is unlikely to be the main driver of zombification. Let me go forward. Okay, that's it. But this time it's different because of the bug. The pandemic shock is hitting firms in sectors that are otherwise generally viable. The shock was not caused by excessive risk taking by firms or banks, as in previous financial crises in many sectors that have gone into partial lockdowns or lockdowns, such as tourism. They're going to rebound after the pandemic. And for those sectors, this shock is therefore a liquidity squeeze, not a solvency shock. Second, banks entered this episode with relatively high capital positions and therefore should be able to absorb loan losses to a greater extent. This should at the same time reduce adverse incentives. And third, the health and economic ramifications of the pandemic have brought about exceptionally large scale government support, which has mitigated the liquidity squeeze and the risk that illiquidity turns into insolvency. So, we have it in the US, zombie companies, we have it in Europe, and we also have it in Asia. We also have it in Asia as well. Let me play this clip here.
Well, in the third part of our series on zombie companies, we take a look at firms that are corporate underachievers, overdosing on that cheap credit from the major economies in Asia, including India, China, and Japan. Now, let's start in India, a country that is home to hundreds of so-called zombie companies. Now, in 2018, zombie companies accounted for 26% of all listed companies in the country, and that is up 13 percentage points from 2008. Now, the rise has become more prevalent because Indian banks have gotten into the habit of basically rolling over these loans rather than writing them off. And this means that firms take on more debt, a phenomenon that can best be explained by former RBI Governor Dr. Raghuram Rajan, who named it the, quote, extend and pretend regime. Now, many subsidiaries of major conglomerates have loaded up on debt, including Adani Power and Reliance Power. Well, over in China, plans were set last year to close all zombie state-owned enterprises by the end of this year. But this strategy will be hard to reach because of the COVID-19 pandemic's impact, as well as Beijing's protracted trade war with Washington. Well, in particular, China's buoyant retail sector is estimated to be home to 20% of the country's zombie companies. And these include the likes of e-commerce player Suning.com, which has overborrowed. And it's a different picture altogether in Japan, with many firms debt shy, actually. But still, zombie firms do exist there. And as we've told you, the term was coined in Japan. Many blame these companies for the country's economic stagnation, or the so-called lost decades, which started back in the 1990s after the huge asset bubble burst.
Okay, so these zombie companies, they are all over the world. It's not just a U.S. phenomenon. It's not just a European phenomenon. It's in Asia as well. It is a global issue that we all are going to have to face. Central banks, governments are going to try to tackle. So let me take a look here. This is from the BIS, the Bank of International Settlements. Just get to one part here. Consequences. Okay. Now again, we understand. Initially this was first set up to keep companies afloat in order to keep people's jobs there, so people can still continue to go to work. We know what happens when people are out of work. It becomes difficult to reconnect, network again, and get back in the flow. But here are some consequences of keeping up zombie companies. So previous studies have found that zombie companies may weaken economic performance. Zombies are less productive and may crowd out growth of more productive firms by locking resources, creating a so-called congestion effect. And specifically, they depress the price of those firms' products and raise their wages and their funding costs by competing for resources. So let me go on here. The BIS findings are consistent with this hypothesis. On average, labor productivity and total factor productivity of zombie firms are lower than those of their peers. Under both zombie definitions, the distribution of productivity of zombies is clearly shifted towards the lower end. Okay, so let me just, it's a lot of technical stuff here. So let me just get to the conclusion of what the BIS is really saying. What do our results mean for central bank policy? Among other things, they highlight a difficult trade-off. Lower rates boost aggregate demand and raise employment and investment in the short run. But the higher prevalence of zombies they leave behind misallocate resources and weigh on productivity growth. Should this effect be strong enough to reduce growth, it could even depress interest rates further. Okay, so we're getting that. It could even depress interest rates further. Now that is significant right there. I think Europe, you're already seeing negative rates. US, we're at zero. So according to BIS, it could even depress interest rates even further. They go on to say, our study cannot answer this question. We leave the exploration of this trade-off to future research. Now, unfortunately, that future research is going to come about once things really start happening. And I think, again, when you look at this thing a little bit longer term, I think we all are going to see how this zombification actually hurt the economy perhaps a bit more. And I think central banks, they could be looking at a point where we need to cut this off. Where do we cut this off? Governments may be thinking the same thing. How do we taper this? How do we taper this thing off? Because essentially, zombie companies, it could be something where the cure is actually worse than the disease. If it keeps going on and on and on, I think you're really going to just start to decimate economies. And again, all the more reason to be having things like gold and silver. You can really see how with the money printing, keeping companies afloat that perhaps should have gone down. It's all going to come back. Everything is going to come back around, and we're going to have to deal with it. We take a look at a few comments here. See what else is out there. Let's see. Let's see. Mr. Nguyen, stimulus would be used to pay interest and not benefiting productivity. Absolutely, that's the thing. They can't grow. At best, all they can do is pay what they have on their plate right now. But they really can't grow. And you got to understand also, the longer this thing goes on, the more the market is going to shift. The more the market is going to want things, demand things, and you're going to see a lot of these companies that were held afloat start to get left behind. And well, what happens then? You're going to see people who are going to have to retool themselves to move forward. You're going to see new industries pop up. You're going to see some industries really start to taper off, start to close down. So this whole zombification of things, there's so many things that go along with it. I mean, it's not just the money aspect. Again, it's the people side hanging on to jobs. It's also, well, if the bug didn't happen, this industry, this company, they would be doing fine. So it has to do with the bug. But once we have a vaccine, economy is good again, then this industry or this company will come back. Hard to say, because again, we said this before. To get a healthy economy, you have to have a healthy people. But the one thing we didn't really factor in on was people need to have a healthy mindset. And if there's still fear out there, you can't expect the economy to come back just because you put a vaccine out there or things like that. People's lives change. They have a so-called new normal. So, how this plays out, as this article said, they have to do future research. It's exactly correct. People have changed. Our lives have changed. Our thinking has changed. So I want to pull up one more article about zombies. And this one gives a little bit more on the numbers, where America's zombie companies have racked up 1.4 trillion of debt. Our student loans, I believe they're at about 1.6 trillion. So zombification has come up to 1.4 trillion. So it's almost on par with student loans if you think about it. Nonetheless, this article is from Bloomberg, where it goes on to say they were once America's corporate titans, beloved household names, case studies in success. But now they're increasingly looking like something else. zombies, and their numbers are swelling. From Boeing to Carnival to Delta Airlines, ExxonMobil Corporation, Macy's, and many of the nation's most iconic companies are not earning enough to cover their interest expenses, a key criterion as most market experts define it for zombie status. Almost 200 corporations have joined the ranks of so-called zombie firms since the onset of the bug, according to a Bloomberg analysis of the financial data ranging from 3,000 of the country's largest publicly traded companies. I guess they're referring back to the Russell 3000. In fact, zombies now account for nearly 20%. 20% of those firms. One-fifth of your market is, I don't want to say dead, but one-fifth of your market is teetering right now. And even more stark, they've added almost $1 trillion of debt to their balance sheets in the span, bringing total obligations to $1.36 trillion. That's more than double the roughly $500 billion zombie companies owed at the peak of the financial crisis. The consequences for America's economic recovery are profound. Federal Reserve's effort to stave off a rash of bankruptcies by purchasing corporate bonds might very well have prevented another depression, but in helping hundreds of ailing companies gain virtually unfettered access to credit markets, policymakers may inadvertently be directing the flow of capital to unproductive firms, depressing employment and growth for years to come, according to some economists here. We have come to the point that we should ask, what are the unintended consequences? And this is what I just spoke on, where, the government, the banks, they're going to have to kind of figure things out, and they're going to have to kind of decide where or how do we end this or slow it down. Torsten Slok, chief economist at Apollo Global Management Incorporated, the Fed, for stability reasons, decided to step in. They knew they were going to create zombies. Now the question becomes, what about the companies that have been kept alive and otherwise would have gone out of business? Well, zombie firms are more commonly associated with the 1990s Japan, post-crisis Europe, or even China in recent years. Their ranks in the U.S. have been increasing for over a decade, fueled in part by years of ultra-loose monetary policy. Okay, so we're getting this. I wouldn't be surprised if he's referring, since he's saying a decade, all the way back to the Great Recession, 2007, 2008. Zombie companies get their nickname because of their tendency to limp along, unable to earn enough to dig out from under their obligations, but still with sufficient access to credit to roll over their debts. They're a drag on the economy because they keep assets tied up in companies that cannot afford to invest and build their businesses. So there you go. That's in part a look at zombie companies. I mean, 20% of, I'm assuming he's saying 20% of the Russell 3000 is zombie. It's zombified already at this point. And again, really the question is, what do we do? Do we keep it? Do we keep it going? Wait for that so-called vaccine, give it some time, and then try and get back to a new normal, and then see if we can cut loose the zombie companies, or if these zombie companies can come back. I mean, what's their end game? I don't think even they know. And this is something pretty significant because it's all part of this so-called transition going on right now. And they are going to decide which companies are going to make it, which companies are going to fail. And so we'll have to see how all this plays out. So let me take a look at a few comments, and then I'm going to take a look at something Mr. Wonderful says about zombie companies. I think some of you folks may know who he is. But for those who don't, maybe once you see his face, you'll know who Mr. Wonderful is. Okay, so let me just taking a look at some of these comments here. Let's see. Okay. Okay. You guys are doing all right. Okay, so let me move on. You guys are good. Let me move on here. So saving zombie companies also means potentially saving people people's jobs. It's a good thing, right? And we all know there's a human side to this. We can't ever forget that or lessen that in any way. Although, just really are the consequences when it comes to zombie companies. And we're going to listen to Mr. Wonderful. You guys may know him as Kevin O'Leary on Shark Tank. We're going to play 3 clips of what he has to say about zombie companies.
You know, I think people are going to read some pretty negative aspects to the job numbers over the next few quarters, but it doesn't really reflect what's occurring in the real economy. And I'll give you an example. There's an industry, let's just take the wine industry. I'm involved in that. I'm an investor in that. Think of the restaurants, the bars, the cruise ships, the airlines. The majority of wine was consumed in the tourism industry. And yet people's propensity to drink wine hasn't changed at all. The entire industry had to pivot to figure out a way to sell it directly to customers because you're allowed to do that in 41 states in America. We have hired thousands of people now to create new digital warehousing, pick and pack. We've gone online. We've bought licenses from all of these tech companies that people are wondering why are they valued so highly. I'll tell you why. They're empowering a new America 2.0, a digitized America. We're now shipping 39 cases of wine in a way that we've never done before. Pre-pandemic, the entire industry was 6% direct to consumer. Right now, it's at almost at 24%. We have found a way around this problem. We're hiring thousands of people to help us do it. And these are high-paying jobs. In some cases, they're designers, they're web designers, they're videographers, they're editors, they're photographers. We have to tell the wine story online. You can't taste it online, but you can look at it, watching it being poured into a glass, et cetera, et cetera. But the industry is figuring out a way to survive, and it's a digital pivot. It's happening in all of my businesses. And yes, there will be permanent impairment to restaurants and entertainment and travel industries. But at the same time, there's a new digital America emerging, and that's why the markets are so buoyant. I'm now much more optimistic than I was in March. Look, I've got 20% of my portfolio that's really hurting. And I actually don't want the government to prop up zombie companies anymore. Stop doing that. Let the market be the market. Figure it out. A new America will emerge in 36 months. It's going to be more profitable.
Okay. See the comments already coming in on Mr. Wonderful there. So Kevin O'Leary, Mr. Wonderful, says, let the markets function as is. He has a bit of a point there. I mean, we all were taught about the free hand of the market, right? There will be innovation. And he's also pointing that out as well with what his company had to do. And again, this goes with zombification of companies where the market, basically, these companies they're frozen in time. In some sense, it's like they're frozen in time, but you and I and the market, we're not. We're moving. We're moving, adjusting to things going on, trying to figure things out. We're going this way, we're going that way, trying to create a new path. But the market, in a sense, is sort of like zombie companies anyway. They're kind of frozen in time. They aren't growing. They're just basically on life support. And that's the thing. When we do start to get to the end of the tunnel, I think we're going to look back and see a lot of these companies that were held up on life support not going to be there anymore. They didn't innovate. They didn't adjust. All they did was stay alive. And so I think that's a great point that Kevin is making. Market will figure it out. The market is you and me, as we try to, I don't like using this term, but as we try to create that new normal where we try to move and adjust and adapt to things, we're going to figure it out. The market's going to figure it out. He says a new America will emerge in 36 months. I wouldn't take that literally. I think he, in general, just means in time. In time, a new America is going to emerge, and it will be more profitable. And that depends how well we innovate. Thing is, we're not going to innovate if we keep zombie companies afloat. You got to cut through the riffraff. You got to shake off the chaff, and you need to find out which companies are worth investing in to go into the future. So he makes a lot of good points there, and he says stop propping up zombie companies. Do you agree or disagree with what he says there? So moving on, we'll take a look at another clip from Kevin O'Leary.
What we're about to do with this next round of stimulus, in my view, could be a mistake. If a company has to die because the world has changed permanently, let it die and let something else replace it. Those good employees will find work as they are in the wine industry. Look at the watch industry. They can't sell watches in boutiques. They've gone online. They're completely around the globe selling to their customers online. That's what I think now, and it becomes more and more in focus to me each week.
Okay, Mr. Wonderful continues on and says, let a company die. That's a tough one, right? I mean, again, there are people attached to it. And even though, let's say, you have a really great employee, jobs still need to be available. And that is something kind of scarce right now. And, it's a tough call, to say that good employees they'll find other jobs. I think if you talk to the man on the street, he may give you a different response to that. But nonetheless, Kevin O'Leary, it was his interview. He says, let a company die. He says the world has changed. It's true. Good employees will find work. Just do the best you can for as long as you can. And hopefully your record will speak for you. So just keep going. And selling online gives you global reach. And that is true. The digitization of everything that's happening. And it kind of leads you to where if you keep unfolding this more and more, that whole central bank digital currency and all of these things where it does look like a so-called new normal, a lot of it is going to be through the web, online, transferring things online. So, O'Leary makes a pretty good point there, whether we want to agree with it or not, whether we like it or not. It's a good point that he made there. So let me see. Let me move on to one more clip from Kevin O'Leary.
Well, there's a lot of money that we're talking about spending in addition to what we've already spent, Kevin. And in your view, in the past when we've had creative destruction, the government's role has been to try to bridge the human pain for the people that are being disrupted to where they can make it to the next new age, whatever it is. Buggy whips went to cars, whatever you want to talk about. So should we be rethinking some of these government programs and the way we're spending the money?
Yes, I've come to the conclusion we should, and I've been a major proponent of those initially, and I made sure that almost 80% of my companies went through the process of getting these loans. But I now know, and it's a reality, that they're not all going to make it. And this is a very Darwinian thing. The government's trying to reduce volatility, but this is a different kind of recession. We turned off our economy. And as a result of the pandemic and people's changes in purchase behavior, there is a new America emerging. And the only way to feel that out is let the market do it. I don't want another $2 trillion poured in to the economy and having politicians decide who the winners and losers are. Look at the airline industry. After the Fed got behind buying bonds, basically it became liquid, and they started raising their own cash. I realize we gave them money in the beginning, but I remember, Joe, when I used to sit beside you, I'd fly to New York, I'd get to the set, I'd go to a hotel, I'd get a driver, I spent a lot of money. I had to make a decision. Do I send my kid to college or have breakfast in New York? I don't do any of that anymore. And as a result, maybe we get back to that, but that's changed forever. So why do I want to pour government money, my money as a taxpayer, into businesses that are not going to survive? And the only way to do that is let Mr. Market do its work. I'm such a proponent for that now. So if anybody's listening in Congress right now, not so fast on the next $2 trillion. Let the market do its thing.
Okay. So, after listening to Kevin O'Leary, and I know it's not just me, probably a lot of you folks out there kind of wondering, have we been fooled? Is all this money being thrown around a way to help us? Yeah, to a point. And at the same time, kind of lull us at a wealth transfer that's taking place right now. Politicians and central banks, they're going to decide who and what will make up the new economy. They're going to decide which companies are going to win and make it over, transfer over, and which companies are not. And I think it's something that's going to come later on. But for right now, I think they kind of made their choices where they want to see cruise lines stay afloat. They want to see airlines stay afloat. And, granted, these are things we're going to need, but, you know, end result, we're going to have fewer and fewer choices. And not all of these companies are going to make it out on the other end. That's for sure. So let me take a look at a few of the comments here, see if I can pull any of these up. Um, Edwin Rivera, I lucked out with my rentals, and people have paid on time all the time. Great tenants. Yeah, I mean that's good. Um, okay, so you weren't really affected with this whole with the whole forbearance thing. Do you know people who were, and maybe how they're doing, how they handled it? That I'd be curious to know. But good for you. Good for you that you're okay with it. So let me see what else is out there. Um, let's see. Manuel de Jesus, all the bubbles in America are huge and ugly. And if I could add in one more word, seems like it's getting infinite. There's seems like there's not a place, not a sector, not an industry that these bubbles have not floated and made their way into. So that's a great point. Let's see. Bloodbath McGrath, another good point. What if it's not a bubble and it's federal inflation at work? It's possible. I mean, they are going to be relentless in their effort to get that inflation. It is going to come, and I've said this before. For decades they've been trying to get inflation. They've never got it. I think when they actually do get that inflation, they're not going to know what to do to stop it or get rid of it. And but throughout history, one thing people do when their currencies really start inflating, hyperinflating, they move on and create a new currency. So with central banks, they already have that new currency waiting in the wings with that central bank digital currency. So I want to play a few more clips from a former Bank of India governor, Raghuram Rajan. So I want to play a few things what he said about zombie companies.
Sort of the junky companies getting bought, companies in bankruptcy, or companies that are just getting a liquidity lifeline but still have very poor fundamentals. Do you think this is all because of the Fed?
Well, the Fed has a role here because it has intervened substantially in markets, and it has propped up even the fallen angels by intervening in the corporate bond markets. So yes, it has some role. The key concern for the Fed is in the short term, it doesn't want financial markets, especially credit markets, to break down. Because the concern also is if it props up companies that are better off restructuring, going through bankruptcy, sometimes even closing down, it may prevent the economy from going to where it really needs to go over the medium term. In the short run, I think it's pulling out all stops and support. If this continues and the level of uncertainty about reopening continues, it will have to start reconsidering how much support it provides.
Okay, so he talks about fallen angels, companies, maybe some should go bankrupt. Maybe you're not allowing them the opportunity to restructure, which may help them come out ahead. So a question here, should a Boeing or let's say an American Airlines be propped up or allowed to fail or given that chance to restructure? I mean, granted, these are not, maybe they are, but not the way we really think of zombie companies. But should they be propped up? I mean, huge companies, should they be propped up and given that opportunity to restructure or see if they'll come out ahead? And again, the problem with the free cash flow to these guys or the zombification is there's no incentive right now to restructure, perhaps even to merge in some cases. There's no incentive to do it. They can basically stand on their own with the money that keeps getting injected. So, again, it may be hurting these companies more than helping. So a couple more things from Dr. Rajan.
Why? What's the danger here of propping up these zombie companies, as you describe it?
Well, the problem with propping up zombies is you create more zombies. If you are propping up unviable firms in a particular industry, they tend to, in a sense, reduce the profitability of other more viable firms. This is the experience with Japan. The second problem is that you build up the need for restructuring, and it may all come to a peak at the wrong time when bankruptcy courts aren't able to handle them, when there's too much demand for restructuring at that point. What you need is a steady process of restructuring, more and more firms going through bankruptcy that need to. You don't need it to pile up upfront, but you also don't need it to pile up down the line when bankruptcy courts simply don't have the capability to address it. Real issue is we don't know how this crisis is going to play out. And so what is important is, on the one hand, you provide what support is obvious, but also you need to ensure that in some sense the market forces are allowed to play out over time.
Okay, so former Bank of India Governor Dr. Rajan says propping up zombies reduces profitability of more viable companies, and we're already seeing this more and more as we kind of go through the information that we get. The more information we collect, we're starting to see this. And firms should go through bankruptcy to restructure in the right way at the right time. And this is key. I think he nailed it. Right way, right time. You got to do it in the right way. And it has to be, I'm going to say, before all of this starts to clear up. Because once we come out on the other side, some companies are already going to be there. Survival of the fittest, they're there, they're made it. Other companies, because they had no incentive to do it right now, they're going to have a much, much harder time trying to come through it in the end. So that's a key element there. You got to be able to do it at the right time. What else did he say? You got to ensure market forces are allowed to play out over time by influencing markets and keeping zombies alive. A market cannot move via natural forces. Again, there's a human side to this. But the markets, which are going to employ people, give them jobs, give them futures, allow them to have a comfortable living, we're kind of keeping them frozen in time right now. And if the natural market forces want to go in one direction, but dead companies are taking up resources from the market will not be able to move naturally. And this is why I'm saying they're kind of sort of like frozen in time right now. So one more clip from Dr. Rajan.
Raghu, do you see this dynamic we've been talking about as uniquely American? Because the DAX has had just as dramatic a channel to the upside, and monetary policy over there is a lot more layered and difficult as they try to get all the partners on board.
Yes, but I think in terms of the amount of support that governments have been giving, I think Europe has also done a tremendous amount, especially with some of the new announcements which go to the peripheral countries in Europe, the southern countries, and help them also with their fiscal. So I think across the industrial world, the combined support of central banks and governments have been tremendous. If anything, you could argue that in Europe, the fiscal effort will be there for a longer period than perhaps the fiscal effort in the United States, even though the United States has done much more upfront. So my sense is a lot has gone out to support the economy at this point. And some of the reaction you're seeing is because of that. Germany, for example, is doing a little better than people expected, and therefore markets are reacting. Now, there is still a lot of uncertainty, which is why I hear the commentary that this may be premature.
Okay, so former Bank of India Governor Dr. Raghuram Rajan says Europe has also been giving tremendous amounts of money to businesses. So again, as I showed you, it's not just a U.S. thing, it's a European thing going on. It's even an Asian thing going on right now. Global zombification. It's a very, very global thing right now. Across the industrial world, the help central banks has given is tremendous. We know this. Fiscal effort in Europe will be longer than in the U.S. A lot of times, because U.S. gets so much of airtime, and I'm also guilty of that, this was new to me, where the fiscal effort in Europe will be longer than in the U.S. That I did not know. I maybe wasn't paying attention to it as much as I should. So this was new to me. What's not new, though, is too much uncertainty. That part is not new. I think we all know this. Okay, so let me see what else is out there. Your conversations are moving all over the all over the place. So let me just move on to a little bit of sort of commentary here. As Kevin O'Leary points out, everything points to a digital global economy. Some businesses simply will not survive in a new economy and should not be pooling resources from those that will thrive in a new economy. Zombie companies are something that sucks the life, the wealth out of countries, out of the markets, and it blinds us to clearly see where the market wants to move and where we should allocate our financial resources, especially for investors, right? You're not getting a clear take on this. Central banks and governments all across the globe are intervening, and you can feel a shift to the new economy coming. You can kind of see they're holding some things up afloat, giving some companies time. And in that shift, a transfer of wealth, it will take place. It is going to take place, if not happening already. And it has to bring in order, or it has to, in order to bring wealth from this economy to the next, that whole transfer over. It has to, right? Companies need to make it from here to there. And so do you. What vehicle do you personally have to make sure your wealth will be able to transfer from this economy to the next? And I was looking at some of the comments there, and you see, that's the thing. Some people are so hung up on price, very hung up on this guy said this price at that time, that price at this time. And they totally missed the boat, where what you're looking at is something, a vehicle to get you from point A to point B. And, a lot of people seem to miss this. They only look at the price and they don't realize that, the other aspects of having gold and silver. It's the wealth transfer, the store of wealth. When these things really come into play, people are going to be looking for that store of value, that store of wealth. When they can't stay in fiat currency, when they can't stay in it anymore, and they need to find something that's going to hold the value of what they have, this is what gold and silver do. So I understand the part about looking at price, trying to buy at the right time and things like that. But the fundamentals of why people buy gold and silver may not, or is not only the investment aspect. It's also the insurance aspect. And this is something a lot of times people may not be easy to see, may not be easy to wrap their head around because, I think it can even be on our fault too. I mean, a lot of guys in the media are so focused on price. We don't tend to really share the aspects of what gold and silver really can do for you. And in result, we get hung up on price and we miss understanding the bigger, broader picture and things that gold and silver can do. So, reading through the comments, I understand the part about price and what people say, their predictions and whatnot, but it's such a small part of why people get gold and silver, why they go into it. They understand what's happening. They understand the money printing, zombification of things, and they need to move into an asset that can be a vehicle to get them from today to tomorrow. And this is something I will continue to play what Dave Drummond says about gold and silver. Dave Drummond from Georgetown Trust.
I believe, like many people, gold and silver are stores of wealth. They could also be an investment instrument, but if you don't look at them like an investment instrument, if you look at them as stores of wealth, you'll note that they hold them very well. And then where have the stores of wealth typically been put? They've been put in areas where there's low risk or smaller risk of those countries being invaded and the gold being taken. So do I think it's wise? Yes, I think it's wise to have some gold and silver within hand's reach, some gold and silver within car's reach, and then some gold and silver within no one's reach, right? With that, I believe that there are places then to store your gold and silver. Looking for places like you guys have that capability. Look for those companies that have that ability and use it. Same type of thing, right? Redundancy.
And redundancy is what it's all about. You got to have some on you, and you may want to have some outside of your jurisdiction if that's your financial situation. And again, everyone is different. Some people, they have the ability to pick up and move, and they will. Other people, you're going to hunker down, stay where you're at. So it's a different situation for everyone there. But I think we all know this. it's not just the price of gold and silver why people move into it. And traders, guys who like to give price outlooks, I think the difference between them and probably most of us, they are not emotionally attached to gold and silver. I know a lot of us were emotionally attached. So when we hear guys talk about retracements and price going down, we don't like hearing that. When you talk about price going up, we like hearing that. But from a trader's perspective, there's going to be things they look for when they do their technical analysis. And when they see these things, they make a move. And they're not emotionally attached the way a lot of us can be. So having said that, I do thank you all for being here. Let me take a look at if there's a few comments that I can go through. Edwin Rivera, my grandma understood what silver was, and she always had a stash. I was too young to understand it, though. That's true. I shared this story before where when I was a kid, my mom, she would open up piggy banks, jars, things like that, empty out the coins, and she would tell me which coins to look for. I didn't know why, but she knew. She knew that some of these coins had real silver in them, and so just like grandma, mom also knew. Mother knows best, right? So, this was something for a lot of us here. It happened in our lifetime where we did see that debasement of coin. And it's happening again where we're seeing debasement of cash with all the money printing. So we are seeing this. So let me take another look at see if there's any more comments. Okay. I guess you guys are doing okay. Gold and silver have said to millions, people told you so. It maybe it's not so funny, but all of you out there who have been buying gold and silver, you've been through it, the ups and downs, but I think fundamentally you've stuck to the reasons why you've bought it, which is an insurance slash investment. Sometimes the insurance part weighs more heavily. Sometimes the investment part weighs more heavily, but you guys have been through it. And fundamentally, I think you folks have stuck to your fundamentals and know the reasons why you've got it. And there are other people on the fence right now who are watching and trying to understand why are you hanging on to something that goes down, or that goes up, or whatever it may be. But it's a different situation for everyone. This is about wealth protection, more importantly, systemic wealth protection. So having said that, I'm going to be wrapping up. Thank all of you guys. I appreciate your comments here, and try to be a blessing more than a burden. A lot of people are going to need help. Make sure you do what you need to do to take care of your family, take care of your friends. The world changes every day. We got to be able to get through it, and the only way we can get through it, or one of the ways, is we have to kind of understand what's going on. And so with that, saddle up for what's coming ahead, and silver up as well. And I'll see you guys next week. Take care, everyone.